right. So, periodic inventory. So we learned what periodic inventory is. Now we're going to actually learn how we cost them out. Okay? So there are many different cost methods that exist, okay, for this class. There are typically three that is very noticeable or widely used. All right. The first one is called first in, first out rule. Okay. This is where, like a typical grocery store, right? Usually you buy one batch of inventory, right? And typically because of those batches of inventory, you are most likely going to sell the first batches that you purchased first, okay? So think of it, for example, a grocery store, right? Why is that concept so imperative? Well, think about it. Everything that you sell inside the grocery store are mostly perishable goods, right? They all have some kind of expiration date, right? Especially, for example, milk. You would never put the freshest milk on the outside and put the oldest milk on the inside, right? It's always the other way around. Oldest in the front, newest in the back. So that's this idea where you're trying to sell the first batch of milk that you purchase first because of the idea that it's going to expire, and if you put your old milk in the back, then you're pretty much going to throw money away because it's spoiled and you can't do anything about it, right? So that's the perfect example of how we would use FIFO as a means of calculating cost. Okay, whatever we purchase first is going to be the ones that we sell out first. Okay. What about LIFO? LIFO stands for last in, first out. Now, this is very typical of any type of electronic store because we all know, like, electronic store, right? They're always going to have the older models, but they're going to have the newer models right next door. So a great example is going to be like an electronic store. I used the iPhone store, okay, or Apple store, right? Right now, they're currently on iPhone 13. Because they released the iPhone 13, everyone's going to buy that phone over the 12, over the 11, because that's the last batch that they brought in. That's the last model that they brought in. It's the newest and the greatest, and they're typically going to sell those one first, then the older models, right? So that's what I use that for example of LIFO. Okay? And then we have weighted average, which once again is where you don't really care which batch came first or which batch came last, especially when the type of item that you're selling or the product that you're selling either has a really long life shelf, or two, it's one of those items that you constantly are frequently selling. So it doesn't matter which batch came first or which batch came last, because at the end of the day, they're all going to be gone within a certain period amount of time, within a couple days, okay? So it gave you the example of water bottles, right? Water bottles is a natural resource that we always need around the house. So whether there's a sale or whether there's not a sale, right? The store is going to constantly be selling water bottles, okay? And that's one of the things that, you'll always see the shelf for water bottles usually clearing out pretty quickly, just because it's a natural resource that everybody needs. And what you're going to notice is it's always been a constant price. It's never been more expensive and it's never been less expensive. It's always been a constant price because it's a natural resource that everybody needs. And again, it's something that is constantly being sold every single day, even if there's a sale or not. Okay? And the last one is going to be specific ID, which is going to be something that a lot of auto mechanics or auto repair shops use. So for example, because if you drive your car into an auto repair shop, right, because you need to get your car fixed, well, here's the thing. The auto mechanic is not going to have all the parts that are available because maybe your car is specific. Maybe you want the actual brand name material, right? You don't want to use a second market or a cheaper part, right? So an auto mechanic repair shop would have some things in stock, right? But they're not going to have everything because, again, it's based on car part. It's based on manufacturing, the model of the car, the year of the car, okay? So again, you can't expect that a Toyota Prius is going to have the same parts as a Honda Civic, right? Everything is completely different, and every single piece in that part is going to also be different, and we have to consider what year and what model those cars are, because again, every year there's a new car, there's a new model, a new year, So in this case, an auto repair shop has to order those specific parts because one piece does not fit all, right? It's a very specific, okay? Now in this class, I am not going to teach specific ID because not every class or not everybody is going to have a business that requires a specific ID, but the other three are more common, okay? And they're more approved through IRS and GAAP, okay? Specific ID, once again, it is a costing method, but I do not teach it in this class. I don't have time for it just because we have other chapters that we need to cover, okay? So, let's talk about it. First one, first in, first out, okay? So here are going to be your formulas that you need to know in order for you to help you calculate first in, first out, okay? All right, so you're going to be seeing formulas such as for figuring out what the purchase price is. Straightforward, quantity times unit price, okay? We have total cost, right? Total cost is going to be your purchase price plus freight equaling your total cost, okay? And then we have your cost per item, all right? Taking your total cost, dividing it by the total number of quantity, all right? And then we have other things such as goods available, which is going to be your beginning balance plus your net purchases, which we'll talk about in a second. And then we're going to talk about cost of goods sold, which is going to be your goods available minus ending balance will give you your cost of goods sold. Okay. So with all these formulas, of course, I'm going to walk you through one formula at a time, so we can be able to see how these formulas apply. Okay. Now, of course, here's the scenario, but I'm going to show you something real quick because what I'm going to be referring to is the inventory worksheet. Okay. The inventory worksheet that we're going to be using is going to look like this, okay? You have two sections. The top section, all right, where we're going to calculate our purchase price, our total cost, and cost per item, okay? The inventory on hand is meant for when you have beginning inventory, okay? Then the bottom half, right? This is where you're going to be calculating your total number of units, the units available, and so on and so forth, and your cost of goods sold, right? And your ending balance. This is your workspace. And right here on the far right is going to be your purchase returns and allowances, okay? So that's what the inventory worksheet, this is the periodic inventory worksheet, and that's what we're going to be using to go ahead and solve for using the costing method like FIFO, LIFO, and weighted average to be able to solve for the numbers that we need to know. Okay. All right, going back to my inventory here. So let's go ahead and look at this example here. All right. So the scenario says that you made the following purchases to journalize each transaction. Okay, assume that sales tax is 8.735. You don't need to know the sales tax. So first here on June 1st, you made a purchase at 100 pages. You made a purchase of 100 toys for $1.25 with the freight costing $25. And then here, June 11th, you made another purchase of 100 toys for $1.28 with a freight of $26. And the last scenario we have here is June 15. You had a total of 80 toys left on hand. Okay, so this is just a scenario, and we're going to break it down one at a time. Okay, starting with June 1st, we made a purchase of 100 toys at $1.25. Here, when you realize and we recognize that a transaction has happened, we're going to go ahead and journalize it. So, right, we learned this yesterday, purchase expense, freight expense, and however we paid. So in this case, we paid on an account. So my purchase expenses, well, I bought 100 toys at $1.25, so it's going to be $125. My freight's going to cost me $25, so therefore I owe a total of $150. Okay. So once we figure that out, this is where we're going to plug it into our inventory worksheet, okay? We're going to plug in the date, we're going to plug in the quantity, we're going to plug in the unit price, and then we're going to plug in the freight. So this is where the formulas that we just took a look at is going to come into play. We need to solve for the purchase price. Well, the formula for the purchase price is going to be your quantity times unit price. So once again, 100 times $1.25 gives you $1.25. Your total cost formula is going to be your purchase price plus your freight. Okay? So in this case, 125 plus 25, 150. Okay? So then now that we solved for our total cost, we now need to break it down because the idea of Fifo, right? We're selling our first batches first. So in this case, we need to calculate how much it's going to cost me for this batch of inventory. So we're taking the total cost because we want to make sure that the customers, when they buy our product, they're covering for the freight charges, right? Because I'm not going to pay for the freight charges. The customer is going to pay for the freight charges, okay? So in this case, I'm going to take my total cost of $150 and I'm going to divide that by my total quantity, so then I get a per unit rate. Okay, so every time I sell a product, that means every time that one product is sold, that's how much it's going to cost me per product, per item. So in this case, right, 150 divided by 100 gives you $1.50. So that means every item you sell from this batch is going to cost me $1.50. Okay? All right. Next one is going to be on June 11th, where we are purchasing an additional 100 toys at $1.28, and the freight is $26. So there you go. Pop my journal in there. Purchase expense, freight expense. Okay. And then we're going to pop it into our inventory worksheet. So once again, I've just increased my purchases on June 11th. I put in another 100. I put in the $1.28, and I put in $26 for freight. I'm going to rinse and repeat the same steps that I just did. So I need to solve for my purchase price once again. Purchase price is quantity times unit price. So 100 times $1.28 is going to give me $1.28. Okay. Total cost is purchase price plus freight. It's going to give me $1.54. Okay. And then last but not least, I need to solve for my cost per item because this batch is my second batch of inventory. I need to keep a separation so I know how much it's going to cost me if I do sell the second batch of my inventory. So I need to solve for my cost per item, which is going to take my $154, and I'm going to divide that by my 100 items to get me a total of $1.54. Okay? Any questions so far?
No.
Okay. So since we reached the end of our scenario, right? Because the last scenario that we have there is June 15. We have X amount of toys on hand. Once we reach the end of our accounting period, so in this case, I do my inventory, I update it every 2 weeks. So in this case, right, what I need to do is I need to tally up my totals. Okay? So in this case, I purchased a total of 200 units, okay? Which gave me a total purchase price of $253. I added up all my freight to give me a total of $51 worth of freight, giving me a total cost of $304. Okay? And what these four numbers do is they are very important because these are the numbers we're going to use to transfer into the bottom half of our inventory worksheet. Okay? So when I plug them in right here, right, under our net purchases, okay, starting for the very first one, right, how many units of items or toys did I purchase? In this case, I purchased a total of 200 toys at $253, right, without the freight. Okay? For this assumption, right, I'm going to teach you this where we're not going to have any returns or any allowances or any discounts. So this part's going to be blank. Okay? All right? So that means my subtotal is still going to be 200 units at $253. Okay? Then we need to plug in our freight because freight adds to our total cost, but it doesn't add to our quantity because remember, freight charges are separate from our actual purchases, right? So we need to combine what those freight charges are. So in this case, my total net purchases should be 200 at 304, which we know because we solved it from our table from above. Okay? So then what happens next is we need to now solve for our next step, which is going to be our total goods available. Okay? So let's go ahead and see here now, because our assumption is that we have no beginning inventory because we started out the accounting period with 0 inventory on hand. So in this case, if I have 0 here, right, my next formula I need to solve is my total goods available. Now the next column underneath or next row is going to be my net purchases. Well, what do I do with those net purchases? They're going to carry from the top and bring it down here. Now, again, the formula for my beginning inventory, or in this case, my formula for my goods available, is beginning inventory plus net purchases. So in this case, I have 0 for my beginning inventory plus my net purchases. So therefore, my goods available that I have available to sell is the 200 items for a total of $304. Right? That's how many goods available I have to sell. Okay? So now I need to figure out the next part because the next part that was given was my ending balance, right? It told me in my scenario that on June 15, someone went down to the basement, took a physical count of inventory, and reported to you that there were 80 toys available, okay? So this is going to this is usually given because that's the key part of periodic inventory is no one's going to keep track of what you sold. But the one thing that's going to be for sure is someone's going to go down to the basement, take a physical count of inventory, and report to you how many items you still have left, okay? So therefore, now that I have 80 units left, that means the next assumption is I need to figure out what my ending inventory or my cost of goods sold is. Because in this case, right, if I started out, if I had goods available of 200 to sell out to the public, right, and I had an ending balance of 80 units left, my assumption is I must have sold 120 units, right? So if I start with 200 and have 80 left, I simply just subtract those two numbers to get me my assumption of I must have sold 120 units. Okay? All right? So then this is where FIFO is going to come into play, right? Right now, I have two batches of inventory, okay? I have the first batch that I purchased on June 1st for 100 items at $1.50, right? And then I have my second batch of inventory that I bought on it June 11, which was a total of 100 units at $1.54. So using FIFO, right, using the methods of first in, first out, we need to sell a total of 120 units. So in this case, let's take a look. My first batch is already 100. So I can get rid of my first 100 units by saying, okay, well, my first batch of 100 was $1.50. So therefore, I can eliminate the very first batch of inventory because I can say my first 100 units that I sold came from my very first batch. Okay? So therefore, you have your first 150 as your cost of goods sold. Okay? So then, now I sold my first 100 units, I still have 20 more units to sell. Okay? So in this case, I only have one batch of inventory left, right? Because my second batch is the only one I have left on hand. So therefore, I need to figure out, well, how many items did I sell? Do I need to keep selling? So in this case, I need to sell 20 more items. In this case, right, it tells me here that all 100 units are going to be costing $1.54 each, giving me a grand total of 154. This is where I need to take my 20 units and I need to use the cost per item to determine how much it's going to cost me to sell 20 of those units. So in this case, 20 times $1.54 is going to give me a total of $30.80. So once I get rid of those 20 units from my second batch, I should be left with 80 units. In this case here, so therefore, I'm going to add my two numbers together because 20 plus 100 is going to be the total of 120 units that I sold. So in this case, 150 plus $30.80 is going to give me a total of 180. And therefore, I should be left with 80 units on hand, right? How do I solve for ending inventory balance? You have two ways. Well, if I know that I should have 80 units left, right, and it's going to cost me $1.54, you can multiply those two numbers across and you're going to get $123.20. Or you could simply do this. You could take your total goods available because here, my total cost of 200 of those units was giving me a total of $304, okay? Since I solved for my cost of goods sold to be a total of $180.80, I can simply take my goods available of $304, subtract my cost of goods sold of $180.80, and I should get the same exact answer of $123.20. Okay? All right? And notice this. The way that we use this, right, when we use FIFO is we started with our first batch of inventory that we purchased, right? Then we proceed to go down until we eliminate each and every single batch of inventory, right? Any questions? Don't worry, we'll have plenty of time to practice this. Okay. So here you go. So that's the first one here, is that we took the first batch of inventory and we got rid of it, right? Because the cost of goods sold here is first in is going to be first out. Okay. So then, now that we reach the end of the accounting period, we now need to convert our inventory. Okay. If you remember, right, when we acquire our inventory through periodic inventory, right, we recognize them as purchase expenses. We don't recognize them as inventory. But the reason why we use that table to compute our ending balances, we had to compute how much we had left on hand, which is your ending balance, and how many items we assumed that we sold. So if you think of it this way, right? When I originally purchased my items, right, I put them in a bucket called purchase expense and freight expense, right? So that means I have two buckets, one that's holding all 200 toys, okay? But now that I reach the end of the accounting period, I need to move and empty out my purchase expense and my freight expense accounts and move them into other accounts, right? I need to recognize what I have left on hand, so my ending balance, and I need to recognize which items I sold. So in this case, that's exactly what we're doing. We're taking our purchase expense bucket and our freight expense bucket, and we're going to dump them into my inventory and my cost of goods sold bucket. So in this case, if I have a total of 80 toys left on hand, I'm going to take my purchase expense bucket, right, that has all 200 units, and I'm going to take 80 of them and put it into my inventory bucket, right? And whatever is remaining in my purchase expense account, it's going to assume that it's going to be dumped the rest into cost of goods sold. So that's what I'm going to be doing. I'm going to be emptying out those purchase expense accounts and freight expense account and dumping them into my inventory and my cost of goods sold account. Okay? Now in this case, right, because our assumption is, well, if I had 80 units left on hand, then I must have sold 120 units. So that's what you have to understand, is that's why we need to separate those, because we never recognized that we sold them in the first place. Okay? All right, and we never recognized they were inventory to begin with. Okay? So in this case, what numbers am I referring to? Well, here you go, right? When we're talking about our ending inventory, our 80 units that we had on hand, which cost me a total of $123.20. That's exactly where I'm going to pop it in there. I'm going to tell myself that, hey, I have inventory left on hand, right? I have 80 units costing a total of $123.20. Okay? And I sold 120 units at a total cost of $180.80. Okay? So therefore, that's going to be put in my cost of goods sold sold bucket, because in this case, I no longer have them anymore, right? I sold them, so they no longer exist. They're gone. And what I got to do here is I also have to recognize, well, what did my purchase actually begin with? Well, we said we had 200 units, right? For a total of 253. So that's because now that I have my purchase expense, I need to zero it out or dump everything out of my inventory. So therefore, I need to take it out, okay? And I'm going to subtract out the $253 by crediting my purchase expense account, right? If you remember the accounting model, right, when we increase our inventory with the purchase expense, we debit our accounts. In this case, I'm decreasing my purchase expense account by crediting it by $253. And of course, because freight is considered a separate cost, right? I also am going to zero that out because this was part of the cost of inventory. So in this case, I'm going to zero that out too with the $51. And what you're notice at the end of the day, your both of your debits and your credits are going to match with 304. Okay? This is what we have to do every single time we do a periodic inventory. We must complete once we finish the worksheet, you must complete the journal by adjusting your inventory and putting in a conversion entry. Okay? Any questions? Okay. So now that this situation is over, right? We have an ending balance of $123.20 with a total of 80 units. What happens when we have this? Well, this is where beginning inventory comes into play because this is true. When we continue on with our accounting period, right? We're constantly moving in a cycle, right? We're going to start over again and compute the same numbers over again, or not the same numbers, but the scenario over and over and over again. But in this case, I have to deal with beginning inventory because I have to carry it over from my previous inventory worksheet so then I can start off with having units in my inventory to begin with, so I can sell out what those items first. Okay, so in this case, I have beginning inventory right on June 15. You had a total of a total of 80 units at 123.20. Okay. Now, if you remember our worksheet, right? To the far top right, we have inventory on hand. This is where you plug in your beginning inventory, right? So therefore, I have 80 units at $1.54, giving me a total of $123.20. Okay. And then, of course, I have my purchases of inventory, right? So this is where I need to plug in my units because I need to solve for my purchases. So in this case, on June 18, I end up purchasing 100 units at $1.27 with a freight of 25. So once again, this is what I meant by rinsing and repeating. Is the scenarios are going to be different, the numbers are going to be different, but the concept of having to calculate the purchase price, the total cost, and the cost per item is going to be rinse and repeat. Okay? So in this case, let's do it again, right? Purchase expense is going to be 127. Total cost is going to be purchase price plus my freight expense. So 127 plus 25 gives me 152. And I need to solve for my cost per item because now this is a new batch of inventory, right? So in this case, if I have a new batch of inventory, then I must figure out how much it's going to cost me for this batch of inventory per item. So 152 divided by 100 is going to give you $1.52, okay? Right, then you're going to do the second one, which is going to give you 130, right? Quantity times unit price, 130, plus $26 gives you 156 divided by 100 is going to give you $1.56. So now again, we reach the end of our accounting period because now it is June 30th. So we need to tally up our totals here. Now, this side is just our purchases and purchases only, right? Because on the right side of this is your inventory on hand. Make sure you know that this is strictly for only purchases. The other side is for inventory on hand, what you start with the account with, okay? So in this case, I'm going to tally up my totals here. This is what I purchased, okay? The other one I had left over that I brought over. I didn't buy those. Those are things that I brought over from the previous previous accounting period. So right now, this is what I bought. I bought 200 units of toys for a total of $257 with a freight of $51, giving me a grand total of $308. So once again, these numbers are important because they're going to apply it into the next worksheet. So once again, right, I'm going to plug in that I bought 200 units at 257, no returns and allowances, and I'm going to add my freight to give me my total net purchases to be 200 units at 308. Now, if you remember, we have beginning inventory, right? Our beginning inventory was what we said it was on June 15, which was 80 units at a total of $123.20. Okay? So that's what we started out with. Then, right, we're going to carry our net purchases down because that's what we calculated from above. And now I need to solve for my goods available, which the formula once again is your beginning plus your net purchases, which is going to give you a total of 280 units available at its grand total cost of $431.20. Okay? So that's how we calculate my goods available. That means with combining my purchases plus what I had previously for my other inventory is what's going to be the available units that I can sell. Okay? And then, of course, are also given that the end of the period, right, we had a total of 60 units left on hand. Okay? So therefore, right, if I started out with 280 units and I have 60 units left on hand, my assumption is I must have got rid of or I must have sold 220 units. Okay? So this is my cost of goods sold. That's how many units that are gone. So now my goal is I need to solve for the cost. How much did it cost me to sell 220 units? Okay? So taking a look over here on our inventory side here on my goods available. Okay? Because I carried over my batch of inventory from my previous accounting period, that's going to act as the batch of inventory I had first, right? Because in this case, the date that I put it on there was June 15. So that's going to be the oldest inventory is going to be the 80 units, right? Think about the milk situation, right? This is milk that I carried over from the last week, so I'm going to put this one first, and then any batches of milk that I buy after that is going to come after that. Okay? So there's the 100 for $1.52 and 100 at $1.56, okay, respectively. Okay? So in this case, there's my goods available, my 280 units available that I could sell. So because I'm going to be still using the idea of Fifo, I need to solve by calculating which batch came first. So in this case, my 80 batch is the first one I have on there. Okay? Now with that batch of inventory, right, since I'm going to get rid of all of it, that's the assumption that it's going to be eliminated, right? I already know I don't need to calculate this because I'm going to take all 80 units and I'm going to, that's how many items I sold, right? So now I still have 200 units left available to sell. And in this case, I need to sell 140 units because my total I need to sell is 220. So then, if that's the case, I need to sell 140 more. Well, let's take a look. Which batch of inventory is next? In this case, my second batch at 100 units at $1.52. Since I'm going to take the whole entire amount because that's how many I need to sell. I need to sell at least 140 more units. Then I can eliminate my second batch of inventory because in this case, I don't need to calculate it because I need to sell 140 units. So therefore, I'm gonna get rid of that 100 batch right there. Okay. So now I'm at 180, and I need to get to a total of 220 units. So therefore, how many more items do I need to sell? Okay. In this case, I need to sell 40 units because that's going to give me 220. So now that I established that I have to have 40 units left to sell, I only have one batch of inventory left available to sell. So in this case, right, I'm going to take my 40, okay, and because the cost per item is going to be $1.56, I need to calculate what that total cost of goods sold if I sold 40 units at $1.56, right? That's going to give me a total of $62.40. And that's going to leave my ending balance with 60 units left at $1.56, giving me a total of $93.60. Okay? So again, now that I have these things, I need to tally up my totals because now I need to calculate and solve for my total cost of my cost of goods sold. So again, I had 220 units and I sold it for a total of $337.60. Okay? And again, your ending balance can stem from either from your goods available by taking your 341.20 minusing 337.60 to get your total of $93.60, or you could simply take your 60 ending balance remaining and timesing it by the $1.56. Okay. All right. So now that we did that, right, this is what happens when we have beginning inventory. How do we solve it for there? Okay, you're just adding an extra number into the cycle, and then understanding that concept, you're just going to cost it accordingly. Okay, so as I've mentioned before, when you have completed the inventory worksheet, you are obligated to complete a conversion entry at the end of the given accounting period. Once again, this is an adjustment entry. Okay, so we already have our tables plugged in, so now we need to plug in what our journal is going to look like. This time, we're going to have our ending balance of $93.60. We're going to have our cost of goods sold of $337.60. And this is where it gets a little tricky. Okay? You have your purchase expense and your freight expense, right? If you remember, my purchase expense only had 200 units available. Okay? But in this case, I want to also include my beginning balance because that's going to make my total goods available to be 280 units, right? Which we distributed through the ending balance and cost of goods sold. So in this case, I need to tack on one more account, and that's going to be the beginning balance of your inventory for the $123.20. And in this case, because I have to get rid of it, because if you remember, right, if you can imagine buckets, right, you have your inventory bucket, you have your purchase bucket, and you have your freight bucket. That's your total goods available. Now that I sold stuff, right, using the concept of FIFO, right, I'm going to dump my inventory that I had to begin with. I'm going to transfer that into my cost of goods sold bucket because using the idea of FIFO, right, I got rid of my beginning balance. Right, I'm going to pick up my inventory bucket and I'm going to dump it into cost of goods sold because I don't have it anymore. Right? And I'm going to take my purchase expense and I'm going to dump 140 units in there, leaving 60 units left to dump back into inventory. Okay? So at the end of the day, you're zeroing out your purchase expense, You're zeroing out your freight expense and you're zeroing out your beginning balance, and you're reassigning them and re-putting them into different accounts for your ending balance and your cost of goods sold. Okay? Any questions? So let's review what we just learned today in this costing method. Well, chapter 5, we learned about how when we journalize our purchases, we must use purchase expense, freight expense, and however we paid for it. Now, the one extra concept that we learned here is we must complete a conversion entry at the end of the accounting period. So in this case, it's going to consist of your ending inventory, your cost of goods sold, your purchase expense, and your freight expense. Okay? So, any questions? No. Okay. So let's go ahead and dive right into our first example here, and then we'll go ahead and take a break. Okay. So again, this is my inventory worksheet, right? This is the worksheet that we're going to be using to compute our numbers in here, okay? So I'm going to show you how this is done, and I'm going to use colors so then you guys can kind of make a linkage or an association to where these numbers are coming from, okay? So in this case, I have 4 questions that are going to be asked. So let's do the first one, okay? Now in this case, it says right here, your inventory method is periodic and it is FIFO, okay? Assume that all purchases were made on, I think it says on an account, okay? So now that that's there, on April 5th, right, we purchased 1,000 units at $5 each with the freight of $100, okay? So what I want you to do is I want you to also practice journalizing, because that's what we did in chapter 5, right? Yesterday, we practiced journalizing. Okay. So in this case, okay, we have April 5th, right? So what did we do here? Okay, we purchased 1,000 units at $5 each with a freight of $100. Okay.
It's in quantity, we will put 1,000, correct?
In this case, I asked you to journalize first. We're journalizing first. We're going to do purchase expense. Okay. How much is my total purchase expense?
5,000.
5,000, okay? So the great thing about using the Excel is I don't have to actually punch it in my calculator, right? I could say, well, I bought 1,000 units at $5, right? Using the keyboard, equal to activate your formula. Okay, that's rule of thumb right there. You need to use the equal sign to activate your formula. And here I typed in 1,000. I used the asterisk key, which is your multiplication, and I said it was $5. So in this case, if I press enter, $5,000 is what it's going to calculate for me. Okay, what else do I need to include? Freight expense. Okay, and how much was my freight expense?
100.
It was $100. Okay. Now I formatted this to show dollar signs on my worksheet here. It is up to you on how you like to view your information. If you want it to have accounting style, that's up here under cells, formatting your cells. If you want to keep it at decimals, you can, or if you want it to have currency, right? So in this case, right, how did I pay for this? How did I pay for these items? Accounts payable. Yes, we paid it on an account. Okay? So in this case, right? Accounts payable. Okay? And it's going to be for my grand total amount of 5,100. Okay? So my note here is I purchased 1,000 units at $5 each. Okay? Right? Now I completed my journal. I'm now going to go ahead and pop it into my inventory worksheet, okay? And I want you to keep this idea in your head because I want you, this is, again, a pre-notion to actually, when we actually start moving into our class project, how are we going to recognize a journal transaction and how are we going to do it in a specific order? So in this case, transaction has happened. I'm going to record it in my journal first, and then I'm going to pop it into my inventory worksheet. Okay? So it is April 5th, right? Quantity, I purchased 1,000 units at $5 each with a freight of 100. Okay? So like I mentioned before, however you like to format your worksheets is whatever you want to do. In this case, I do like to keep it accounting style, okay? So I can see the dollar signs on there. It helps, okay? So how do I solve for my purchase price?
Quantity times unit price.
So in this case, I take my 1,000. I'm going to multiply with my unit. So in this case, I'm using simple math in the in my Excel. Okay, I'm taking 1,000 using the asterisk, which is your multiplication, and I'm multiplying by the $5. And what I'm also doing here is I'm cell referencing. Okay, I'm clicking on the number of that cell that it's in, and I'm clicking on this number here, which is the 5. So in this case, what's my total purchase price here? 5,000. Okay? How do I solve for my total cost?
Purchase plus freight.
Purchase plus freight. Okay? Which gives me a total of 5,100. So then now I need to solve for my cost per item. What's my cost? How do I solve for my cost per item?
Total cost divided by quantity.
Total cost divided by quantity. So in this case, your backslash is your division. Okay? So how much is it going to cost me per item? $5.10. Good. Okay? So that's how I use my inventory worksheet. We're only doing the first part here. We're not completely done yet, but that's what I have to do. Scenario, journal, then worksheet. Okay? So then what happened on April 10? We ended up purchasing 750 units at $5.75 each. And the freight cost me $75. So in this case, I'm going to go to my journal. Okay? How do I journalize that I purchase more inventory?
Purchase expense.
purchase expense. Now, just like in Word, you also have the same capabilities to copy and paste as well. So I'm going to copy and paste this entire transaction, right? But I'm going to use my keyboard to copy this, and I'm going to paste it in here, okay? Now I also pasted the description here, so I'm just going to go ahead and modify this description because I bought 750 units at $5.75 each. Okay? So in this case, what is my total purchase price or purchase expense? If I bought 750 units at $5.75 each, what's my total purchase expense?
$4,312 with this system.
Good. Plus, what was my freight?
75.
75, which should give me a grand total of $4,387.50. Okay. I already adjusted my description here. So then now I can plug it into my inventory worksheet. Okay. So my inventory worksheet, it is April 10. We purchased 750 units at $5.75 with a freight of 75. So same thing goes here. What is my purchase price?
Quantity plus unit price.
Quantity times unit price. Mm-hmm. 4,312. And what was my freight? What's my total cost? $4,387.50. Now, I need to solve for my cost per item because I'm using Fifo. I need to know what my second batch, how much it's going to cost me per item. So when I do end up selling my second batch of inventory, I know how much it's going to cost me. So in this case,
Total cost divided by quantity.
okay. Did anybody solve for that already? $5.85. Okay. Now in this case, if I want to, I can prove if they are even or not. So in this case, by extending it out, the decimal places to the left or to the right can show me whether it is a unrounded number or not, or if it goes beyond the second decimal point. Okay, I will show you how to calculate things when you have to use the equal round tool in 2 days from now. Okay, all right. So then let's see what is next. April 20th, we end up purchasing 200 units at $6 each, with the freight costing $20. Okay. So, how do I represent that?
Purchase expense.
Okay. Purchase expense. We purchased 200 units at $6 each. Okay. So what's my total purchase expense here?
1,200.
Okay. And my freight was $20, so therefore $12.20. Okay. So let's go ahead and plug those numbers into my inventory worksheet. Okay. It is April 20th, 200 units at $6 each with a freight of 20. So here, how do I solve for my purchase price?
Quantity times unit price.
Quantity times unit price, okay? Now here's a cool technique that you can learn too, is using the fill handle tool, okay? Since I use cell referencing, right? So if I double click on this, it tells me that I did my quantity of 750 and I multiplied it with my unit price of $5.75. Now, because I have this in this cell, right? If I click on this cell, you're going to see this little tiny green triangle at the very bottom right corner of this cell right here. If you go ahead and do that, your cursor becomes a black plus sign. Okay? I can click, hold, and drag, and what's going to do, it's going to copy that exact formula into my next cell. And this time, because we have cell referencing, right now my cells are under relative cell referencing, meaning it's going to move down accordingly. It's not going to stay in one spot. That means the next calculation I do is going to be taking the next two cells down, or the next cell down, right? So in this case, right, that's exactly what it did. It calculated me whatever 200 times $6 is. And because I brought it all the way down to the fourth one, right, that means anything I enter in between the quantity and the unit price is going to automatically calculate this for me, right? And you can do that for any cell that you put a formula in, okay? So for example, let's go ahead and do, what is the total cost of this batch of inventory here? 12.20, right? Copy that formula down. It's going to take my formula that I put in there to do the total cost plus, the purchase price plus my freight gives me total 12.20. And last but not least, I need to solve for my cost per item, $6.10. Now, I dragged my formula down here and it tells me that I have a division problem. That's because all my cells that I have in this very last row are empty. But if I keep filling them in and keep filling them in, this will eventually calculate. Right? All right. So, last but not least, right, April 25th, we purchased 500 units at $6.25 each with a freight costing $50. Okay, so last journal I need to plug in. April 25th, okay. This time I purchased 500 units at $6.25. Okay, so what's my total purchase expense?
$3,125.
Right? Freight was $50. So therefore, 3,175 is your total. Okay. So let's go ahead and plug those numbers into my inventory worksheet. So in this case, right, it is April 25th. And let's see, in this case, I purchased 500 units at $6.25. And boom, it automatically calculated for me. What was my freight? $50. Boom, it automatically calculated for me. And that means my cost per item also calculated for me. So again, Excel is a very powerful program. It makes you help you calculate everything a lot quicker. Okay? So that's our inventory worksheet. Last scenario we have here is April 30th. You had a total of 600 units on hand. Okay? Okay, 600 units on hand. Excuse me. So, since I know I have 600 units on hand, that means I reached the end of my accounting period. April 30th. So therefore, I need to tally up my totals, okay? So what I'm going to use here is equal sum, okay? Equal sum is going to add up your numbers accordingly. So in this case, I need to add up my whole entire column for quantity, okay? To give you my total number of units I purchased. So in this case, what is the total number of units that I purchased?
2,450.
2,450, okay? I need to also solve for my total purchase price. So in this case, equals sum. What is the total value of my purchase price?
13,637.50 cents.
Okay, I got a bunch of hashtags here. So what does that mean? That tells me my window is just too small. Okay, nothing else. Okay, and of course, if you can drag the formula down, you can also drag the formula across. So if you could see my little green triangle here, I can move my formula across, and it's going to do equal sum for the next column and the next column. So in this case, total freight was $245, giving me a grand total cost of $13,882.50. Okay? Right? So then, now that I have my my totals here, this is where you're going to be plugging in. So I'm going to highlight this right here, and I'm going to show you that where these numbers come from. So in this case, I'm going to use yellow, okay? In this case, yellow needs to come from here, right? So what was my total purchases that I made? In this case, I purchased 2,450 units right here for $13,637. And this came from yellow. Okay? My purchase returns and allowances, because I don't have any purchase returns and allowance, this is going to be 0, right? And this actually comes from this table right here. We will see an example where I will introduce you to purchase returns and allowance, and that will be next week when we do the Chapter 5 review. Okay? So that's that right here. Okay? Now, how does these formulas work? Now, here on the left column over here, I gave you hints and indications of how this table works. Okay? So in this case, right, when I have my purchases, what returns and allowances does is it subtracts my quantity and my total cost away. Which makes sense, because if you purchase them and then you end up returning them, therefore your subtotal should equal your purchases minus your returns. So in this case, because I don't have any returns, it's going to be 2,450 at 13,637.50. Okay. My freight. Okay. In this case, I need to add my freight to get my total net purchases. In this case, freight adds 0 to quantity. However, it adds $245 to my total cost. So in this case, this is also yellow, because it came from the information from above here. Okay? So therefore, let's add my freight together, right? Since freight adds 0 to quantity, I'm still going to be left with 2,450. However, if it adds to my total cost of my purchase price, then it should give me a total of 13,882.50. Okay? Now this number doesn't technically come from this number, but it is definitely a good way to give a reference. Now, if you end up having returns and allowances, of course this number is not going to be the same as this number. Okay? Right? So there's that right there. Now, next is my beginning balance. I don't have a beginning balance because that comes from this over here. I have nothing to begin with. So in this case, this value is also 0. Okay? So then now I need to carry my net purchases. Where did I solve for my net purchases? Right here. And I'm going to use another color to indicate where this is coming from. And I'm going to use green. Okay? So you can kind of see it. So this is where my net purchase is, and I'm going to carry this value down here. I'm going to carry this value here. Okay? So that's your net purchases. Okay? And of course, I need to solve for my goods available, which is usually beginning plus net purchases. So in this case, I don't have beginning inventory, so therefore whatever my net purchases is going to become my goods available. Okay. So then we were given a piece of information at the end of the accounting period. In this case, April 30th told me that I have a total of 600 units left on hand. So 600 units. So in this case, how do I solve for my cost of goods sold? Right? Here gave me an indicator that my goods available minus ending inventory is going to give me my cost of goods sold. So if I had 2,450 units and I have 600 left, how many units did I sell?
1850.
You have 1850. And this is where I'm going to need to calculate my total cost of goods sold. So in this case, I'm going to highlight this because this is where this number is going to come from. Okay? Now, you can build your table if you'd like here. That's what I'm going to use this section for, is I'm going to go ahead and tally up what I have here. So in this case, I'm going to create my cost of goods sold table. So if you want to do that here, you can. This is cost of goods sold, right? And what I'm going to do is I'm going to automatically put in my equal sum so I can create a running balance. So in this case, every time I enter in something in this window, it's going to automatically calculate my total column here. Okay? Okay? So in this case, we need to use Fifo. Okay? So let's take a look at my batches of inventory. Okay? I have all these batches of inventory, and I need to sell a total of 1,850 units. So in this case, let's take a look at my batch of inventory. Which batch of inventory am I going to sell from first?
April 5th.
April 5th for the whole 1,000 units, right? Because I need to sell 1,800 units. So in this case, I'm going to take all 1,000. And that's exactly what I'm going to do. I'm going to copy this number from up here. And I'm going to copy this number from here because this is what it's going to cost me. Okay. going to cost me $5.10. And because I don't need to calculate this, I'm going to copy my total cost. Okay? But I use this as a reference point so you know where the numbers came from. So in this case, that's exactly what I did. I'm going to eliminate it. Now, you could choose to eliminate how you want to eliminate it. I like to actually strike through it because now I no longer have 1,000 units anymore. Okay? It's gone. Okay? So then I still have to sell 850 units. So which batch of inventory am I going to take out from next?
April 10.
April 10 for 750 units. So in this case, that's exactly what I'm going to do. I'm going to copy the information here. And because I have to get rid of all 750 units, it's going to cost me $5.85, which I already know what that total cost is. It's $4,387.50. Okay? Now, as because I am self-referencing and bringing those information down, it is also calculating my numbers for me because I put my equal sum formula in there. Okay? So in this case, right now, I have 1,750 units. How many more do I need to sell?
100.
You need to sell 100 more. Okay? So I'm going to strike through my second batch of inventory here. So therefore, which batch of inventory am I going to take out from next?
April 20.
April 20th, the 200. Now this case, I cannot take all 200 units. I'm only taking 100 out of this one. So in this case, how do I solve for only selling 100 units? In this case, I'm only taking 100. It's going to cost me $6.10 per item. Okay? So I'm going to self-reference that right here, is that it's going to cost me $6.10. So therefore, how much is it going to cost me to sell 100 items at $6.10?
610.
$610. And again, that will tally up my total. So I have $1,850, giving me a grand total of $10,097.50. So therefore, that's where this number comes from. Okay? So therefore, last but not least, I need to solve for my ending balance. Okay? So, how do I solve for my ending balance?
You do net purchase subtracted by COGS.
Good. Or in this case, it'd be goods available, not net purchase. Okay, goods available minus COGS, which should give you $3,785. Okay. You can also solve for that by here. So I'll give you the example here. Right. The second way that you can solve for that is right? Well, in this case, I can go ahead and type that in there, right? So my ending balance was 100 units, okay? Plus, what do I have left? I still have this 500 units left. So that's going to automatically give me my total here of 600 units. And I'll highlight this too. And this one will be orange, okay? So I got 600 units here, okay? And because if this is going to cost me $6.10 and I sold 100 of them, so I only have 100 left. So in this case, that's going to be my 610, and this right here is $6.35, which I know to be this much here. So this is going to give me a total of, if I add these two numbers together, $3,785. So again, that's your ending balance. Okay? And again, that's going to be from here. Okay? So you could choose to solve it either way, whether you're taking your goods available, minusing your COGS to get your ending balance, or you can simply solve your ending balance by taking the numbers that you have left over and plugging it in here. Okay? Any questions here?
No.
Okay? So again, I'm using color so you guys know where all these numbers are coming from. Okay? So again, last step that we have to do is our conversion entry. Okay? So it is April 30th, right? We need to convert our purchases into inventory and cost of goods sold. So in this case, I need to have first my ending inventory. Okay? Next is my cost of goods sold because I never calculated how much it cost me to sell my items until the very end. And I need to zero out my purchase expenses and my freight expense. Okay? So, how much is my ending balance in my inventory? What's the total cost of my ending balance in my inventory?
3,785.
Good. Okay. How much was my total cost of goods sold?
1,097.50.
Good. What was my total purchases? My purchase expense. In this case, I'm referring to the purchase price.
13,882. Is that what it is?
That's including freight. That's your total cost.
Okay, the 13,637.
Yes. And then what was the total amount of freight?
245.
245. So, making sure that your total, that your rule of thumb here is that your total debits match your total credits. So here I have 13,882.50 on the left, 13,882.50 on the right. Okay? And of course, I'm going to add my description, conversion entry for inventory, for periodic inventory purchases. Okay. Any questions in regards to question 1 and 2? Because 2 is to do the conversion entry.